Talk to me more about how you see this potential impact, and is it something that would be just transitory? Of course, a lot is yet to be determined in terms of when that restart happens.
Yes, that's for us is critical, is that there's still a lot here which is unknown. So until we get more clarity, right now it's a lot of speculation, but really where the impact will be felt first and foremost will be if this outage is prolonged. And by that, we're saying more than a few days. And that's likely to see refined products, particularly gasoline in the US East Coast lift. The impact onto crude oil is something which is actually going to be negative if this continues on for a prolonged period, because we'll see stockpiles build up in the Houston area, and then we'll see refinery demand start easing, and then we'll see a glut of oil near Cushing. So that's how we really see it translate through. But before that happens, there's still a lot that has to take place in terms of these events unfolding. So it's still a risk, and it may very much be transitory, but this is just something how we're seeing the situation unfold.
Let's move to a story that is well established, which of course is the great commodities boom. I want to throw up this chart when it comes to iron ore in particular, because I know you've got some interesting views on the fragility of this extraordinary rally. Take a look at this. Iron ore head in the clouds. Spot, of course, hitting 200. We also have futures in Dalian trading at multi-year highs as well. You can see futures there in the blue in Singapore represented on that chart. How far does this go, Vivek, particularly as it seems like this market is ignoring any idea of a transitory state of inflation, and it's really ignoring a lot of the virus-related bad news as well around the world?
Sure. So when it comes to iron ore, it's still a very physically driven market, which is not the case with some of the metals and oil. So when we talk about iron ore, it's very much going to be linked to what is happening with demand in China and what is happening on the supply side. So just touching on China, China accounts for about 73% of global iron ore imports. So when we talk iron ore demand, it's a one-way story in that regard. And in our view, what's really driving this is a steel demand impulse in China that is very hard to understand how long it will last for. Just to put into perspective how strong this rally in iron ore is and why it's so strong, is steel prices are high enough to keep China's steel mill margins at the highest level since 2018. Now, for us, that's remarkable because not only is the steel sector absorbing very high iron ore prices, keep in mind that they're also absorbing very high coking coal prices because of that unofficial ban on Australian coking coal. So this sector is really very, very hot. And just when China's steel demand impulse will ease is perhaps the biggest question of 2021 right now.
So just a quick follow on that. So in other words, if China's demand falters, you figure that takes some of the steam out of this rally, or is it possible that as more and more economies get their vaccines rolled out, reopen, get rid of restrictions, that even if China's demand is not quite as hot, there'll be some rising demand in other parts of the world that will keep it going?
That's right. Initially this year, the view was that we'd see a bigger contraction in China's steel demand in the second half. That has certainly moderated given the momentum that we've seen. And so there is a chance that ex-China can come back to such an extent that we still see steel demand globally pick up, and that'll see iron ore demand remain at these elevated levels. It's important to note that when we talk about what has allowed this rally to be what it is today, it's very much been a supply situation that predates COVID-19. You know, when we talk about iron ore supply, the biggest story is that Vale's production is still well below potential following that fatal dam collapse in January 2019. Okay. So in our view, that's still very critically part of the story, that supply is still not able to meet that strong demand impulse from the market.
Yeah, that's a very powerful force. How about oil? Oil's had a run. How much further can it go? Again, it seems that, you know, demand is holding up, and in fact, again, as economies reopen, people can travel more. There's going to be definitely a lot of places where the demand goes up as well.
Yeah, certainly. And on the oil side, we certainly see the demand story being very strong. The part of the oil complex, which for us is really one which is a policy call, is what we see from OPEC plus. And so far, the policy has very much been about managing supply so that we keep drawing down inventories. And so long as that has been the main thematic, oil prices seem to be well supported, and something that can be the case for the rest of the year. I think the demand story is well known. Like this commodity is very exposed to COVID-19 and its restrictions. About 2/3 of oil consumption is tied to transportation. So the moment you have reopening of economies, I think in the same way that oil prices collapsed last year because of demand concerns, that demand can come back. The problem is we're currently sitting with about 8% of spare supply. Or actually closer to 10%, but we have 8% under the control of OPEC plus, which really means that we see an artificial shortage, and that can keep prices higher for longer.